All right, so just finishing this question off and doing the balance sheet. Thing just to be careful of here is just to pick everything up, make sure you're not leaving anything out. You've done a fair few workings at this stage. So first up, balance sheet, tangible fixed assets. I'm doing headings here for cost, accumulated depreciation, and net book value. There isn't any depreciation you need to worry about in this question, so I'm just going to slot them into the net book value. In the book they've done cost and net book value. You can do that. I'm just going to slot them into net book value here to save a bit of time. So where am I? Premises 260. So premises at the start of the year, it's 260, but just be careful because remember you bought an adjoining warehouse during the period of 95, so don't forget that. You had 260 that you purchased at the start of the year when you purchased this business, 95 then that you bought during the year, so that's 355. All right, look, I'll put the cost in and I'll put the zero accumulated depreciation. What else then? So yeah, I remember when I was going through bank payments, I mentioned that motor vans. So I seem to have purchased motor vans during the year of 32,000. There was none of those at the start of the year. Nope. So that is just motor vans costing 32. I'm not told to deal with any depreciation, so 32,000 in the net book value as well. Same thing here. Computers and equipment 39. Again, just make sure there's none there at the start of the year as well to add it onto it. There's not. So just computers and equipment. 39,000. Three of them add to 426. Oh. And then just one it's easy to forget, but pretty much always comes up in these questions is goodwill. So don't forget, at the start of the year, the very first thing I did, the working one, when I did that statement of capital, I purchased the business for 340 grand, but I only got 301 100's worth of stuff. So the difference between those is goodwill. All right, and that goes in as an intangible fixed asset. So goodwill, 38,900. So just add the two of them together. 464,900 is like your total fixed assets, tangible and intangible. All right, current assets then. So from the end of the question, I have closing stock of for resale and also of heating oil. So both of those are current assets. So stock for resale. So that's your 18,900. And then stock of heating oil. That's 700. Debtors 21,500. Yep. Nothing to adjust there. No bad debt provision or anything. So debtors 21,500. Trade creditors will go in current assets. Cash balance of 980. So that is a current asset. Electricity due. So an expense due, that's a current liability. So that's money you owe at the end of the year. So that'll go down with creditors. Just the cash balance of 980 might jog your memory that we did a bank account. And I said the reason we're doing that is for the balance sheet. So we totaled up all the lodgements of the bank account. We took away all the payments and we got 64,100 as the closing bank balance. Now, let's just look through the no, so goodwill I've already put in. Sales, no, nothing else for current assets there. Cash, no. Receipts, yeah, I put that in. Loan interest due, that's going to be a current liability. So again, like I probably should have, as I was going through these, maybe noted where they're going. So that interest due is going balance sheet, current liability. Let's remember this is creditors due after 1 year, so that's going to go down, or within 1 year, that's going to go down in the next section. Over here then, some are working 6 general expenses. That was like an opening wages due, so that's not going on the balance sheet at the end of the year. My light and heat, I've dealt with that 700. This 1020, that's the electricity charges due, so that's what I said is going on the balance sheet into current liabilities. That's kind of drawings. Insurance, yeah, so yeah, insurance prepaid at the end of the year, so an expense prepaid. So I should have put in balance sheet current assets there. Okay, so insurance prepaid. $600 is a current asset. And rent's prepaid as well, so another expense prepaid here of 3,000. Is also a current asset, and that is me done. Okay, so 7 current assets there. Add those together, 109,780. And then on to my creditors due within 1 year. Or amounts falling due within 1 year to give us a proper full title. So what's going in there? So I've got creditors of 17,900. I have a few things then that I noted as I was going through the notes. So I have interest due of 1,200. So remember that one I was saying it would be really easy to miss the kind of the loan repayment that you're going to pay within a year. Okay, so the 10,000 that you're going to pay in March next year, that's within 1 year. And the light and heat then as well. So the 1020 light and heat due. So there's 4 of those. If you add those together, you've got 30,120. Take those away from current assets and you get 79,660. And that is net current assets. We're going to add those on to my total fixed assets and get 544,560. And that's my total net assets. On then to my financed by. So financed by, I'm going to have creditors due after 1 year, and that is my loan. So again, I've split that. So the loan is 120, 10 grand I'm paying March of next year. So within a year, the rest of it then I'm paying the following year. So that loan is 110,000. So the 120 take away the 10, and then capital and reserves. I have got so yeah, so this is what you were calculating at the start. Okay, you're not really calculating, you're going to give it, I guess, as well. So you purchased the business for 340. So that's the owner of the business putting money into the business. That's what capital is. So that 340 is your capital. Okay, so that's why you might term this or head this a statement of capital. So the 340 grand that the owner is putting in at the start of the year, that's like your opening capital. So that's your capital on the 1st of January, 340. You have also got then net profit. Net profit then, sorry, so the other side here was 103,210. You then go on another one that we haven't seen before. One thing we kind of had in the bank lodgements, which we haven't dealt with yet, is the dividends here of 6,500. So dividends received by a company. It can be complicated enough. It can go in on the profit and loss sometimes. For this company here, it's going to go in as capital introduced. Okay. So just when you see it on one of these questions, that's capital introduced 6,500. And then just run out a bit of room here. So just drawings then as well. I totaled up my drawings all together as 15,150. So 3 of those, take away the drawings, is 434,560. Add that to the 110 and you get 544,560. All right, and that is capital employed, and it matches your total net assets there. All right, so there is your balance sheet done. So the profit and loss and balance sheet were quick enough there once I had done all the workings. The workings took a little bit of time, but yeah, it's a short enough profit and loss and a bit longer, but short enough balance sheet as well. So that is incomplete records A. So incomplete records using the control account method for higher level.